Hello everyone, welcome back to Stock Market Meridian. Today is 16th July 2026 and you're watching today's pre-market report. Let's begin our video with global markets. Starting with the US markets, the S&P 500 and the Dow Jones Index opened with a gap up and ended the session in the positive zone. However, the Nasdaq closed in the negative due to selling pressure in AI and semiconductor stocks. Coming to the European markets, all the major indices closed in the negative zone. And in the Asian markets, Japan index closed nearly 1.5% higher. But today they have opened with around 1.2% gap down. China markets also closed in slightly negative zone, while South Korea index ended the yesterday's session with a strong 6.3% gains. But today it opened with nearly 4.5% gap down. Overall, the global markets are currently indicating a negative sentiment. We will discuss about GIFT Nifty data at the end of this video. Now let's move to the commodities section. US WTI crude oil is currently trading around $79 to $81 per barrel, while Brent crude oil is trading nearly $83 to $85 per barrel. In the Indian commodities market, crude oil futures closed with slight gains, while natural gas futures ended the session with strong gains of around 1.3%. In the precious metal segment, Indian gold futures are closed lower by 0.3%. While international gold prices are trading in positive zone. Indian silver futures also declined by 1.1%, whereas international silver prices are currently trading with positive momentum. Now let's check the ADR's data. Yesterday, amongst the major ADRs, Infosys, Dr. Reddy's, Reliance Industries closed in negative zone, while ICICI Bank and HDFC Bank showed strong positive momentum. Compared to the yesterday, the sentiment in IT sector has improved from negative to neutral. Mainly because Wipro is set to announce its quarterly results today. After TCS delivered strong numbers, the market is expecting another healthy performance from Wipro. Now let's move to the FIIs and DIIs data. Yesterday, FIIs were net sellers of 735 crore rupees, while DIIs were net buyers of 704 crore rupees. Overall, institutional positioning continues to remain neutral to slightly positive. Yesterday, China GDP came in below both the previous reading and market expectations. In the US, producer price index data also remained weak. The Bank of Canada kept interest rate unchanged, while US crude oil inventories came in slightly above expectations, but remained below the previous week levels. This is slightly positive for crude oil prices and could be mildly negative for equity markets. Looking at today's key events, the markets will closely watch the UK GDP data, US retail sales data, Philadelphia Fed Manufacturing Index, and US initial jobless claims. And tomorrow, the focus will be shifted to Europe's CPI inflation data, India foreign exchange reserves data, and a press conference by US President. Before moving further, a quick reminder. I upload pre-market report every morning before market opens and also post-market report every evening after market close. So if you don't want to miss any important market updates, make sure you are subscribed to Stock Market Meridian. Now let's look at the geopolitical updates. The conflict between United States and the Iran continues, with both sides exchanging attacks, neither showing signs of backing down. Meanwhile, shipping activity through the Strait of Hormuz has improved compared to previous days. During the last 24 hours, 23 ships entered and 18 ships exited in the Hormuz, indicating that the route remained operational and is not completely closed. However, markets will continue to monitor crude oil prices closely, and a meaningful relief in global sentiment is likely only if Brent crude oil falls back below $80 per barrel. Now let's move to the company's specific updates. NTPC Green Energy announced that its joint venture has secured a fresh clean energy project. The project was awarded to Ayana Renewable Power, a wholly owned subsidiary of ONGC NTPC Green Private Limited, which is a 50-50% joint venture between NTPC Green and ONGC Green. Ayana has successfully won 50 megawatt wind power project through an e-reserve auction conducted by HCCI under its 2000 megawatt national wind energy tender. The auction concluded on 15 July 2026, means yesterday, with the project secured at a tariff of 3.85 rupees per kilowatt per hour. This is strengthening the company's renewable energy portfolio. Next, Adani Power has officially signed a long-term power supply agreement with Maharashtra State Electricity Distribution Company Limited. Under this agreement, the company will supply 1600 megawatt of thermal power for the next 25 years, providing highly stable long-term revenue visibility. The electricity will be generated from a new 800 megawatts of two units with ultra supercritical thermal power plant, which Adani Power will develop under the design, build, finance, own and operate model. The required coal linkage has already been secured under the Government of India's Shakti policy, making this a significant long-term positive development for the company. Now let's cover the quarterly earnings. First, HDFC Life reported a healthy set of quarterly numbers. Net premium income stood at 16,727 crore rupees, registering a 15.1% year-on-year growth while declining 35.7% quarter-on-quarter, mainly due to seasonal factor and which is a very common in insurance industry. Net profit came in at 611 crore rupees. This is up from 11.5% year-on-year and also 22.9% growth in quarter-on-quarter. Net profit margin stood at 3.65% compared to 3.77% in same quarter last year and also 1.91% in previous quarter. Expenses of management ratio stood at 22.5% compared to 21.9% last year. It's grown. Overall, HDFC Life delivered another strong quarter with healthy premium growth, improving profitability and stable operational efficiency. HDFC AMC reported another stronger quarterly performance. Revenues from operations stood at 1,099 crore rupees, growing 13.6% year-on-year and also 4.6% quarter-on-quarter. EBITDA came in at 850 crore rupees. This is up from 11.4% year-on-year and also 2.3% quarter-on-quarter. EBITDA margin stood at 77.33% compared to 78.87% last year. Net profit came in at 837 crore rupees, increasing 12% year-on-year and also 34% quarter-on-quarter. Net profit margin improved sharply to 76.12% from 59.22% in previous quarter. Overall, the company delivered a strong quarter with double-digit growth in revenue and profit while maintaining industry-leading margins. Next, HDB Financial Services reported an impressive set of quarterly numbers. Revenue from operations stood at 4,938 crore rupees, registering 10.6% year-on-year growth and also 4.1% quarter-on-quarter growth. Gross non-performing assets improved to 2.34% compared to 2.56% last year and 2.44% in previous quarter. Net non-performing asset declined further to 1.04% from 1.11% last year and 1.09% in the previous quarter. Net profit came in at 785 crore rupees, rising 38.3% year-on-year and also 4.6% quarter-on-quarter. Net profit margin improved to 15.9% compared to 12.72% in same quarter last year. It's grown. Overall, the company delivered an excellent quarter with strong earning growth and continued improvement in asset quality. Next, ICICI Lombard reported mixed quarterly numbers. Gross premium income stood at 8,860 crore rupees, growing 10% year-on-year and also 9.7% quarter-on-quarter. Net profit came in at 403 crore rupees, declining 46% year-on-year and also 26.2% quarter-on-quarter. Net profit margin stood at 6.72% compared to 13.32% in same quarter last year. It's grown. Expense of management ratio improved sequentially to 28.8% from 32.1% in previous quarter. The decline in profitability was mainly due to the company creating an additional 165 crore reserve following the recent Supreme Court judgment related to motor accident claims. Overall, the company's core insurance business remained healthy with strong premium growth, although one-time regulatory provision impacted profits. Next, Angel One reported a strong operational performance during the quarter. Revenues from operations stood at 1,429 crore rupees, registering a 25.35% year-on-year growth while declining 2.04% quarter-on-quarter. EBITDA came in at 368 crore rupees, increasing 47.5% year-on-year but declining 20.25% quarter-on-quarter. EBITDA margins also stood at 22.71% compared to 24.76% last year. Net profit came in at 231 crore rupees, surging 102% year-on-year while declining 27.7% quarter-on-quarter. Net profit margins also stood at 16.19%. The company's board also declared an interim dividend of 1 rupees per share, Overall, Angel One delivered excellent year-on-year growth, although higher expenses and seasonal factors impacted sequential profitability. Next, Himadri Speciality Chemicals also reported an excellent set of quarterly numbers. Revenues from operations stood at 1431 crore rupees, registering a 28% year-on-year growth and also 11.2% quarter-on-quarter growth. EBITDA came in at 344 crore rupees, increasing 26.7% year-on-year and also 13.3% quarter-on-quarter. EBITDA margin stood at 24.04% compared to 24.30% in same quarter last year. Net profit came in at 228 crore rupees, growing 27.4% year-on-year and also 10.1% quarter-on-quarter. Net profit margin stood at 15.95%, remaining largely stable year-on-year. The company also approved a 368 crore rupees capital expenditure plan to expand into high-value businesses like carbon nanotubes and super specialty carbon black. Overall, Himadri delivered another outstanding quarter with strong growth across revenue and profits, supporting by healthy margins and expansion plans. Now looking at the GIFT Nifty, yesterday GIFT Nifty closed in 24,106 level and today also opened at similar level, indicating muted start or slight gap up in our market. And here on your screen, you can see the companies list which are going to announce their results today. Mainly, Wipro and Tech Mahindra is in the focus. So that's all for today's pre-market report. If you found this video useful, don't forget to like, share and subscribe to Stock Market Meridian. I will see you again in today's post-market report. Thanks for watching. Signing off. Bye bye. Jai Hind.